Hi everybody, this is Lara with your end of the week video for the S&P 500 for the trading week ending Friday 10th of January. Assume the trend remains the same until proven otherwise. There's very obviously a bullish upward trend in place for the S&P. The next target for a possible interruption to the trend, not an end to it, just an interruption, is 3289. I'm expecting in this aged bull market as it comes to an end, three big interruptions to this trend. The next one coming I'll label minor wave 4, and I'm expecting it to last about 2 weeks and be a sideways shallow consolidation. Let's take a look at the Elliott Wave count first and then classic analysis, which strongly supports this Elliott Wave count. The Elliott Wave count sees the bull market for the S&P, which began in March 2009, as the simplest Elliott Wave structure, a 5-wave impulse. 1 and 2 are off to the left of the chart, and I'm telling you in my text analysis which weekly candlesticks they're at. That's important so you can draw this channel correctly. Here is 3, 4 and 5 is incomplete. When you draw the trend channel from 1 to 3 and then place a parallel copy on 2, it perfectly shows where 4 found support. And in the middle of 3, the third wave of the third wave overthrows the upper edge of the channel. That's the strongest portion of the bull market in terms of momentum and slope. And so this channel looks textbook perfect, which has two important implications. It means that 5 from this low to this high is unlikely to be complete, because I can't count a complete impulse from this low to this high and have reasonable proportions between second and fourth waves. It looks like the fourth wave's counterpart to these second waves still haven't unfolded. And the other implication is 3 is shorter than 1, which means because 3 can't be the shortest, 5 is limited to no longer than equality in length with 3 at this price point. Cycle wave 5 beginning here may only complete as a 5-wave structure. It may only complete as an impulse or an ending diagonal. It's much more likely to be an impulse, and so far it certainly doesn't look like or meet the rules for an ending diagonal. An impulse subdivides 1, 2, 3, 4, 5, and within the third wave it may only be an impulse. The impulse subdivides 1, 2, 3, 4, 5, and within the middle of the third wave 1, 2, 3, 4, 5. Elliott wave is fractal. Upwards movement is getting really close now to this channel, so it's important to draw it accurately on weekly and monthly charts. And again, I'm giving you those weekly candlesticks very clearly in the text article, which is below the chart. So draw the channel carefully, and make sure it's on weekly and daily charts. If price comes up to touch this trend line next week, that could be where minor 3 ends, and I'll expect a really strong reaction down from there. Along the way up to complete cycle wave 5, I'll expect consolidations or pullbacks to show up at the weekly chart level for minor wave 4, counterpart to minor 2, and then intermediate 4, counterpart to intermediate 2, and then finally primary 4, counterpart to primary 2. These primary 2, intermediate 2 and minor 2 all show up at the weekly chart level, and it's the proportion between the second and fourth waves within an impulse that gives what we call Elliott wave the right look. So if these all show up, the structure for cycle 5 will have the right look. Primary 4 may not move into primary 1 price territory, but before that, intermediate 4 may not move into intermediate 1 price territory, but before that, minor 4 may not move into minor 1 price territory below this now invalidation point. At the daily chart level, here is the start of intermediate wave 3. We're looking now at the middle of this third wave. 1, 2, 3 could be complete. Again, it could be over at Friday's high, and 4 could have begun, or 3 could continue higher toward my short-term target, 3289. 4 may not move into wave 1 price territory. Draw a channel, an acceleration channel around this middle of the third wave from 1 to the last high, place a copy on 2. If 4 is deep and or time consuming enough, it may find support about the lower edge, but it may be quite shallow and end midway within the channel. That's also a reasonable possibility. At the hourly chart level, this is the main wave count. Here's the end of minuet 3, 4, and the start of minuet 5 within minuet 5. 1, 2, 3, 4, 5 possibly could complete next week. Subminuet 4 may be a sideways turn, a combination, a flat or a triangle, and it may not move into subminuet wave 1 price territory. A new low by any amount at any time frame below the short-term invalidation point would tell us that this should be the most likely wave count. At that stage, I will expect that the first of those three big consolidations or pullbacks or fourth waves has finally arrived, and I'll label it minor wave 4. I'll expect it to be relatively shallow and last about 2 weeks. At the weekly chart level, if we move the degree of labelling of the entire bull market all down 1 degree, then instead of a grand supercycle degree trend change, a once in multi-generations trend change coming up, we could just be seeing a cycle degree trend change. Cycle wave 1 may be nearing an end, it may be a long extension, followed by cycle wave 2, a relatively brief and shallow bear market to be over within a year, and then a third wave at cycle degree could follow. Both these wave counts have about an even probability. When the final fifth wave, here labelled primary wave 5, is complete, then I'll be using or giving a lot of weight to the AD line and how long a divergence it has between price as to decide as to which of these two ideas at the weekly chart level is more likely. If this explanation isn't clear enough, then I strongly encourage members to view the monthly charts where I show you with big arrows the big difference between these two wave counts. But for now and for the next year or two, we still need to see this final fifth wave coming to an end, and it's going to take many months yet. At the weekly chart level, this week completes an upward week, a higher high, a higher low. It has some support from volume. This is bullish. On balance, volume makes a new all-time high with price. This also is bullish. There is longer term bearish divergence between price and RSI. This is hopeless as a timing tool, but it would tend to support the view that a fifth wave is coming to an end. This can develop further. Occasionally it just disappears. But with the data in hand at this time, this supports a mid to longer term bearish outlook, which also supports the idea for the Elliott Wave count that a fifth wave is coming to an end. If that's correct, then I'd expect this divergence with RSI to develop even further. ADX at the monthly chart level is indicating there is still an upward trend, and at this time frame, in a relatively early stage, MACD full bore bullish. At the weekly chart time frame, not monthly, that was a weekly chart. At the daily chart level, for Friday, prices completed a bearish engulfing candlestick pattern. It doesn't have support from volume though, and its range isn't really that great. This is a rather weak bearish engulfing candlestick pattern, so I'm not going to give it much weight. As minor wave 3 comes to an end, we're starting to see a little bit of bearish divergence between price and RSI, and when this comes after RSI reaches reasonably overbought, as it did back here a couple of weeks or so ago, that is often, not always, often an indicator or a really good warning of a trend change. And so this is exactly what I'd expect to see as minor wave 3 comes to an end. But I'm going to use that price point, that last little swing low, to add confidence to the view that minor 3 may be over. For now, assume the trend remains the same until proven otherwise. ADX indicates there is still an upward trend, which is not yet extreme. ATR is overall flat as price rises, normal behaviour for this market. On balance, volume has been making new highs with price, except for the last session, but because the last session is a red candlestick, that's not a particularly strong signal. We've been over RSI. MACD is whipsawing at the moment, so not providing particularly useful signals at this time, and stochastics is overbought, but when this market trends, stochastics can remain extreme for really long periods of time. What about the AD line and inverted VIX? At the weekly chart level, prices made new all-time highs, as has the AD line. This rise in price has good, strong support from market breadth. This is bullish. At the short-term picture, A red candlestick for Friday sees the AD line decline. This is a single day divergence or instance of divergence. It's bearish, but it's relatively weak. I'm not going to give it much weight. It could be an indication that -3 has ended and -4 has arrived. And we do have a candlestick reversal pattern, but these indications are really quite weak. I'd rather assume the trend remains the same until proven otherwise. I'm going to use price to tell us. Inverted VIX moved higher for Friday, as did price, but inverted VIX has not made short or mid or longer term new highs along with price. There is over 2 years now of bearish divergence between price and inverted VIX. The short term, that was the weekly chart, price has moved higher this week, as has inverted VIX, and for the short term, price made new highs for Friday. Inverted VIX slightly declines. There is very small, weak, short term bearish divergence here, but again, I'm not going to give that much weight. I want to see a new low below 3258.14 for the very short term before I have any confidence whatsoever that -3 may be over and -4 might have arrived. When price remains above that point, assume the trend remains the same, upwards. That's all from me this week with your S&P analysis. I hope that all of our members are having an awesome weekend.